Hello traders, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. We are expecting rather calm day. Today we had one significant movement on the market, which was on British pound because of the worse than expected data from retail sales. This movement created trading opportunity on euro to British pound. Also, we are very close to creating a trading signal on the cable, so British pound to American dollar. But for that, we need a little bit more time, and we need to break an important support. But I will obviously show you that in a second. From the fundamental point of view, nothing significant happened yesterday, so it wasn't so eventful as on Wednesday. Yesterday we had a conference from Donald Trump, but he didn't say anything, any details about his fantastic, phenomenal tax scheme that he prepared or is preparing, and we'll find out in the end of February, so we still have to be patient to see that. Apart from that, nothing really happens, so trading is mainly technically, which is good for us, right? Because we like technical analysis, we like this kind of setups. Okay, let me show you the calendar. As you can see, Friday is actually empty in terms of the data. We had this retail sales, look, it was much worse than expected. Retail sales both from New Zealand and from Great Britain, but obviously this one from Great Britain, that was a huge miss because 0.9 was expected and we got minus 0.3, so that is a huge change. So analysts made quite a big mistake when they try to estimate the actual number here. As always on Friday, let's see the most important data that will be shown in the next week. On Monday, as usually, we shouldn't expect any significant news. We have only PPI from Germany, but it won't be so influential, I guess. On Tuesday, we have minutes from Reserve Bank of Australia meeting. That should cause some volatility on Australian dollar. And apart from that, that will be a PMI day. So we'll have PMIs from Eurozone, also from the biggest economy in Eurozone, so from Germany and from United States as well. On Wednesday, retail sales from Canada. You will see today that retail sales can be really influential data. We will have also FOMC minutes, GDP from Great Britain, CPI from Eurozone. Also, those will be important data for Euro and for British pound, most definitely, even if we don't have 3 exclamation marks here, but anyway, that's important data. On Thursday, we do have data from Germany, GDP, but let me show you. Okay, next week. Yes, on Thursday we do have GDP from Germany. As always on Thursday, initial jobless claims from United States, and on Friday CPI from Canada. But as you can see, if I would limit the next week only to 3 exclamation marks, that wouldn't be a busy week at all, right? So hopefully we'll get some volatility from Donald Trump. Well, it depends if you like volatility. Well, from what I'm aware of, what I was told, retail traders love volatility. I can see where's that coming from. Me personally, I prefer calm markets. Maybe not boring markets, right? But I prefer calm technical trading, going from support to resistance, from resistance to support. So I don't mind a calm market. If there is a trend that price follows trends, I'm alright with that. If there is a boring side trend, obviously I would like to see some volatility. But if I would have to choose from significant data and no data, I would choose no data. It is expected that the stack scheme will be shown not next week, but in the last few days of February. But political risk next week will be also present, obviously. Donald Trump will say something. We don't know what yet, but he will. We have elections in France, so we should get some events from that as well. But from the macro calendar, as you can see, not much will happen. So let me show you the technical side of the market. So the thing I like, the thing I do believe, and the thing that bring the profits. What do we have here is euro to Australian dollar, right? On a daily chart, euro to Australian dollar, we were here, okay? The first time we spotted this position, and that was here. We are somewhere here, right? 120 pips, and we said that when the price will manage to retrace this to cover that bearish candlestick, that will be a bullish engulfing. Actually, it wasn't here, it was the price went higher. We are somewhere here, right? That was 2 days ago. We were anticipating bullish engulfing here, and actually we are very close to that. Well, we got a bullish engulfing, but we are very close to creating a hammer candlestick on a weekly chart here. As you can see, this is an important support which was present already in, well, in 2014, 2015, 2016, not. And now we do have a test of this long-term support. Test is positive for buyers because we do have a long tail, we do have a hammer candlestick. I'm not telling you that the trend will reverse. For that, trends usually do not reverse if with one candlestick, right? Well, maybe here shooting star, here shooting star. But I think trends need a bit more. But that can be a nice trigger for a bullish correction. Correction which can lead us at least here. 230 pips higher, or maybe to the trend line, right? As usually corrections do that. They retrace the price to the trend line, then there is a bounce from the trend line, and the trend continues. We usually do not go against the trend, right? And I warned you, I told you about that recently, that we do not go against the trend. But when there is a situation like that, so we are on a very important horizontal resistance, crucial for the situation here. We are after a long streak of bearish candles. Well, apart from this one, but it's not a big difference between those opening and closing price. So we can assume that we have 1 to 6 bearish weeks in a row. And after such a strong decline, we meet horizontal, very important support, and the price is creating bullish engulfing on a daily chart and a hammer on a weekly chart. we can assume that this setup, even that it's a counter trade setup, this setup can actually work, and you can actually potentially can benefit from this movement. And well, we do have this position on our live trading account. It's already protected with a break-even point, so we are not on a stop loss. It's on break-even point, so our stop loss is slightly above the entrance, so we cannot lose on it. Now, trader would like to open this position 170 pips, potential target 240. Risk to reward ratio is not so good as it was before, because we opened this position with a stop loss around 70 pips, and we got 350 to catch, so risk to reward ratio was significantly better, but still this is trading occasion, maybe trading setup, which is still worth to look at, and I would consider it. If I wouldn't have this position right now, I would consider opening it right now still. So euro to Australian dollar is showing us that potentially next week Australian dollar will be stronger, well, weaker at least against euro. What is Australian dollar to American dollar showing us is that potentially Australian dollar will be stronger, but obviously it's a different time frame, because here there is a bullish trend still. But what I would like to show you, you probably know about this correction equality patterns. Well, I'm sure you know. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It strikes again. It's impossible, right? So all those corrections are around 70 pips depth. I'm not telling you how long they will last, if 1 day, 2 days, well, usually 1 day, but sometimes 2 days. But the thing is that price makes around 70 pips downswing, and after that bounces. Here you can see that the price made 75 pips and then bounced from this position. So bounced 20 pips. So even if you have even if you don't have such a strict stop loss and such a tight stop loss, so you allowed yourself to have stop loss like 10 pips lower, it still would be 2-to-1 trade. So in terms of scalping, that's a nice idea, I guess. Well, I'm not a scalping expert. I prefer swing trading and position trading, but I guess that would correction equality movement is something worth looking at if you're a scalper, I guess. Well, it's also good for position trading as it's H1 chart, so those corrections last 1 day, 2 days, and then upswing lasts another 1 day, or maybe 3, or maybe 4 or 5. So it makes it a decent swing trading opportunity as well, right? So again, 12, the same correction in a row, around 70 pips. In the long term, how does it look? Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And it's not a surprise that we bounced from this resistance. Look, on a daily chart, resistance, 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 resistance. So we bounced from it. The price created pin bar. As long as we stay above this blue line, the sentiment is positive. Also this horizontal support. Well, look, this upswing was very strong, right? Technically, even if we stay above 38.2 Fibonacci level, it means that we should be alright. Here, especially here, that 38.2 Fibonacci is also a top from the wedge, which happened in December, and a support from October. right? So it's a very important support. Actually, in the long term, it looks like really Australian dollar will be weaker in the next few days, which goes in line with setup on euro to Australian dollar, and going against Australian dollar in the next few days or maybe weeks seems like a reasonable idea. We are against Australian dollar on our trade with euro. So obviously we can be biased, but we're not, because we trade mostly technically, and we are aware of the fact that your mind can play tricks on you, and that trading psychology is the most important. So we are not looking for any excuses or additional signals to back our view, but it's how it looks like from the technical point of view, right? On gold. Gold is correlated with Australian dollar. Most recently, appetite for gold is huge. Again, if we compare situation on stocks and on gold, that stocks are skyrocketing, which usually sends the gold lower. But here gold goes higher and higher and higher, and despite even the stronger American dollar, we can see that there's a nice, really nice demand for gold right now. So who's buying gold? Smart money or retail guys? Who's buying stocks right now? Smart money or the street? Right? In my opinion, stocks are now being bought by the street, and gold is being bought by smart money. Right? So smart money are abandoning stocks, escaping from stocks, and they're buying gold because they are preparing for a big finish, for a big slide. I don't want to say recession, but for a larger correction. It's usually how it is. It's just a matter of timing. It's just a matter of spotting the right moment, right? But the mechanism is the same. At the end of the bull market, what happens is that price is advancing higher. Obviously, bull market needs to start from the top, right? Bear market needs to start from the top, and bull market finishes on the top, right? So when the price is advancing higher, 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 smart money, so banks, institutional investors, they are closing their position, and only street is buying, because street is attracted by articles and commercials, experts, analysts, etc. Everybody is telling you to buy, so they are buying. But they are always late, because they are not creating a trend, but they are following trend. Those big boys need to find a second side of the transaction, right? So they want to sell. In order to sell, somebody needs to buy. So the street is buying, and they are moving their capital. They are taking profits and moving their capital to safe haven assets, because they know that when the bubble will pop, price on stocks will decline sharply and price of gold will go up. This explains for me the situation on gold, that we're having an upswing on gold despite the upswing on stocks and on American dollar, because there is a real demand for gold right now, because smart guys are protecting themselves against a deep correction on the market, right? So that's the situation on gold. We are about, well, we just tested 1,245 almost. There is definitely a lot of sell orders here. It was tested once, twice, third time. but eventually, at the end of the day, well, at the end of maybe next week, this resistance will be broken, in my opinion. Canadian dollar to Japanese yen. Here we spotted a nice buying opportunity. Last week the price advanced higher, touched the upper line of the wedge, so everything is going according to the plan, and that triggers a correction. As long as we stay above the green line, the sentiment is still positive, and we should see a bounce here and a breakout of the upper line of the wedge. But this situation looks decent. It looks very nice from the technical point of view, and definitely we will keep our eyes on Canadian dollar to Japanese yen, because it can give us nice profits in the future. Euro to American dollar. So after bouncing from this from the last Fibonacci support 61.8, the price broke out of this flag and is advancing higher. They touched 50% retracement of this downswing, went lower to 38.2 of this one, and this one, so both 38.2, and now they use this support at this level as a support. Sentiment stays positive as long as they stay above this support. I would say that this support will be the most important in the midterm, 23.6 and 50%, so 10.59, and this one 1.0640 will be the most important in the short term. So this one in the midterm 1.059, and this one 1.064 will be the most important in the short term. And this, the sentiment obviously is positive. And silver. Yesterday on silver we made another higher highs and higher lows, and we are aiming this resistance created by two Fibonacci's by 38.2 and 50%. Most probably we will get there. Nobody will be surprised that we will. There is a nice trend line here. As long as we stay above this trend line, the sentiment is definitely positive. Well, for sure we will have a correction here, right? It's normal. Even in the upswings, the price declines. But as long as we stay above the blue line, there is a positive sentiment, and it would be nice to see something like that on silver, right? And after that, obviously, a spike up. American dollar to Japanese yen. Well, it does not look so good. It looked good here when the price broke from this wedge. But there is a lower appetite for American dollar, and we can see that the price is declining. They created this pin bar on resistance. As long as we stay above 38.2, the sentiment is positive. When the price will break 38.2, that will be a negative sign for this instrument. And after the breakout of this line, the price should decline for sure. American dollar to Swiss franc. What we had here was a channel down formation. It was also a flag of this trend, right? But in the midterm it was a channel down formation, and then we got a breakout. It looked like the price will advance higher, but this looks like a false breakout right now. The price went lower, created a flag in the midterm. It's starting to be a little bit complicated from the technical point of view if you did not follow this price swings from the very beginning. But to make that easier for you, as long as we stay above this horizontal support, the sentiment is kind of positive. But once we will break this support, it will be negative. Well, when you're in a positive sentiment, you think about buying, right? But here there are no buy signals whatsoever, right? So even despite the fact that we are in a positive sentiment, there is no buy signal on American dollar to Swiss franc. And actually I can remove this instrument from my group of instruments, because I would like to see only decent occasions. British pound to American dollar. I told you that here to create a trading signal we need to break one support, and this support is this lower line of the symmetric triangle, right? So we do have a symmetric triangle. We had two attempts to break the upper line of this symmetric triangle, but both of them failed. This downswing was driven by the false breakout, but mostly by the retail sales data, which I showed you that came worse than expected. Price went lower, but they didn't manage to break the lower line of the symmetric triangle. They created a hammer on an hourly chart, and they are bouncing from the lower line of this symmetric triangle, which actually creates a good opportunity for a breakout, because you do have a strong horizontal support, and sell stop order does not look so bad here at all. On H4 chart, it looks promising for buyers, right? No doubts about that. If this candle will close, you can think about buying. In the same time, stop loss, good place for a stop loss is below the tail, but in the same time you can open there a sell stop order, and in case that buy order won't work, you would not only close the buy order but also open a short position. That's in this kind of a situation it looks right, it looks promising. American dollar to Canadian dollar, bouncing from the horizontal support and attacking the midterm uptrend line, right? But the situation is not so clear. New Zealand dollar to American dollar. Well, we highlighted this head and shoulder formation yesterday. At the end of the day, the price declined, right? But it wasn't because of this head and shoulder formation. We had a breakout of a neckline, but after that the price came back, so this head and shoulder formation was denied. But at the end of the day, we can see that the price is declining, and what happened is that we bounced from this horizontal resistance, and that possibility we marked with this arrow a few days ago. We said that the sentiment here is short, is bearish, but you have two places where you can open short positions, because we are somewhere here, I guess, right? And we said that do not open now, but wait either for a breakout here or for a bounce here. And the second option actually happened. There was a bounce. So if you follow our daily analytical reports, you should be alright and happy with this. I told you that British pound, this worse data from retail sales created a nice trading opportunity on euro to British pound. Yes, that's true. On H4 chart, what we had here was a head and shoulder formation. Left shoulder, head, right shoulder. The price broke the neckline here, but it was a false breakout, right? False breakouts, what they do is they create a movement in the opposite direction. So now the price is skyrocketing. Also, this data helped to break the line connecting top of the head and the right shoulder, which is actually a midterm resistance and is advancing higher. After the breakout, when the price is making higher highs and higher lows, it increases the chances for a continuation, to follow up. The closest resistance is here. Even if the price will decline, like here, that shouldn't be a problem, because technical analysis is now telling us that we should go somewhere here, right? I wouldn't open now because on H4 we do have a shooting star candlestick, so most probably we will experience a downswing. But once you will see first demand here, that can be a good idea to open long positions. Let me show you also Brent, which is still closed in a side trend. Well, we made new lower lows, but it does not change the technical situation here. Also on DAX, after the breakout from this wedge, the price advancing higher, creating another correction. Most probably will have a bullish breakout again. And S&P 500, what is doing right now is a head and shoulder formation. But with S&P 500, I do not believe in those formations, right? Even that we had a breakout of this neckline, and now the price is testing this neckline. They are crazy, they are just crazy, and most probably they will go up, 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 and make new highs again. Okay, so no trading signal on oil, we just wait. Mid-term, short-term sell signal on S&P 500, but I wouldn't follow that because those guys are crazy. And let me show you other instruments. Long-term buy signal here, mid-term buy signal here, but long-term sell signal, buy signal, buy signal, no signal, here buy signal, no signal, short-term buy, and mid-term possibility for a sell, but a pending order, no signal. Here sell, and here buy. So that's the situation on the market right now on a few instruments that I prepared for you. Stay safe on the market. Remember to follow to protect yourself with stop loss orders. Also remember that trading and investment in financial markets involves an element of risk, and if you're looking for more decent trading occasions, you have to follow our Twitter account and our website alpari.news. Now a short break, and after that we'll have a webinar about MetaTrader 4. Thanks very much for watching, and see you soon.